At 6:32 in the evening, Eastern Time yesterday, on April 7th, 2026, a president of the United States, who had spent the previous 12 hours threatening to destroy an entire civilization, sent one post on Truth Social and changed the price of everything on Earth simultaneously. This will be a double-sided ceasefire. Trump wrote, and within 60 seconds, Brent crude was falling, S&P futures were rising, and Bitcoin, which had been sitting at $68,399 under the weight of 40 days of war, detonated upward towards $72,700. And what CoinDesk confirmed was a 5% move that triggered $595 million in total crypto liquidations, with 427 million of those liquidations hitting short sellers who had spent weeks betting the wrong direction. It is now the morning of April 8th, 2026, and this channel is going to spend the next 45 minutes explaining why what happened last night was not a relief rally. It was a revelation. The revelation is this. During 40 days of the worst geopolitical crisis in the global energy market since the 1970s, during a period when the International Energy Agency described the Hormuz disruption as the largest supply disruption in the history of the global oil market, during a period when gasoline at the American pump went from $2.98 per gallon on February 26th to $4.14 on April 7th. According to AODA data confirmed by CNN, Bitcoin went up. Not up a little, not up, and then immediately back down. Bitcoin established rising price floors through every successive escalation, ending the war period up approximately 8% from where it was on February 28th when the strikes began, while the S&P 500 was down over 3%, while gold was down 18% from its pre-war high according to Protos, and while the SPDR Gold Shares ETF hemorrhaged $4.2 billion in its first week of the conflict. One asset survived the most severe energy shock in modern history and emerged from it stronger. This channel is going to tell you exactly why, and it is going to do it through the lens of one man who predicted this moment with embarrassing precision 4 years before it happened. That man is Michael Saylor. And the argument this channel is going to make today, grounded in his exact words, his documented purchases, and the on-chain data that the Iran war produced, is that what the 40 days between February 28th and April 8th revealed is not that Bitcoin is a hedge or a safe haven or a diversifier. What it revealed is something more fundamental than any of those words capture. What it revealed is that Bitcoin is primal timber. Before this channel says another word about Saylor, about ceasefire terms, or about what happens next, it is going to take exactly one block to explain the metaphor in the title. Because if you understand it, every data point that follows locks into place with a precision that no other framework can match. Primal timber was the term used by American settlers, engineers, and builders in the 18th and 19th centuries to describe the old-growth forest wood, dense, ancient, load-bearing, that could not be substituted by any other material when the task was building something that had to last. When the original builders of American civilization needed a foundation that could bear the weight of everything that would be constructed on top of it, they went to the primal timber, because nothing else had the structural integrity, the compressive strength, and the age-earned density to serve that role. Everything else, the bricks, the mortar, the ornamental stone, was built on top of the timber, not the other way around. Michael Saylor has never used the phrase primal timber in his public communications. This channel is not putting words in his mouth. What Saylor has used repeatedly and with increasing precision across his major speeches from 2022 through 2026 is a specific vocabulary that maps directly onto this metaphor. At Bitcoin 2025 in Las Vegas, confirmed by both Bitcoin Magazine and The Block, Saylor stated, "Clarity comes the moment you realize Bitcoin is capital, perfected capital, programmable capital, incorruptible capital." At Strategy World in February 2026, confirmed by FX Street, Saylor stated, "Digital credit is built on digital capital." Well, digital capital is Bitcoin. At the Digital Asset Summit 2026 on March 26th, confirmed by the Crypto Times and the official DAS 2026 X account, Saylor said, "It is a way to store economic value digitally to move it through time and through space without any physical instantiation." And in a post on X on March 10th, 2022, a date this channel is going to return to repeatedly, Saylor posted 3 words in response to Russia's invasion of Ukraine. "War will accelerate the adoption of Bitcoin." He was right then, he is more right now. The primal element of the metaphor comes from Saylor's own framework in his Saylor series podcast episodes, documented in detail in Medium.com analyses from 2021 through 2025, in which Saylor consistently positioned Bitcoin alongside what he calls the primal technologies of human civilization: fire, mechanical energy, digital computing, the foundational layers of the human enterprise, on top of which everything else is constructed. The point is not that Bitcoin is primitive. The point is that Bitcoin is foundational. And the point this channel is making today, grounded entirely in what happened to Bitcoin between February 28th and April 8th, 2026, is that the Iran war did not test Bitcoin and find it lacking. The Iran war tested Bitcoin and found it load-bearing. This channel is going to do something that most Bitcoin analysis channels never do. It is going to start with the prediction before it shows you whether the prediction was right. On March 10th, 2022, as Russia's invasion of Ukraine entered its 15th day, and oil markets were pricing a global energy shock that sent Brent crude above $139 per barrel in intraday trading, the highest since 2008, Michael Saylor posted on X, "The war will accelerate the adoption of Bitcoin." 3 days earlier, on March 7th, 2022, he had posted, "If you don't fear inflation, regulation, war, you don't need Bitcoin." Both quotes are documented and verified by CoinGape, Crypto and Frisco, and Crypto Pump News from March 2022, and both represent the same underlying thesis expressed in different registers. The thesis is not that Bitcoin benefits from war in the way that defense contractors benefit from war through increased demand for their specific product. The thesis is structural and macro. War creates the precise conditions that make Bitcoin's specific properties most valuable. War creates inflation because governments running military operations spend money they do not have through deficit financing. War creates monetary instability because central banks are forced to choose between fighting inflation and maintaining economic stability. And the answer is almost always to print. War creates counterparty risk in every traditional asset class. Gold can be sanctioned, bank accounts can be frozen, real estate can be bombed, and sovereign debt can be restructured. But an asset without an issuer, held in cold storage by its owner, cannot be sanctioned, frozen, bombed, or restructured. And war, most importantly, creates exactly the kind of long-duration institutional uncertainty that pushes large pools of capital toward assets whose value proposition becomes more credible as the duration of the crisis extends. The Saylor tweet from March 2022 was about Ukraine. The thesis it expressed was general. 4 years later, when Operation Epic Fury began on February 28th, 2026, confirmed across PBS, CNN, NBC, Al Jazeera, CBS, and every major news organization. The general thesis was given a specific and extraordinarily precise test case, a 40-day conflict involving the world's most important energy choke point, a president threatening to destroy civilizations, gasoline rising 39% in 38 days, and Bitcoin stubbornly refusing to do what every traditional macro model says a volatile risk asset should do when the world is on fire. The prediction from 2022 was documented. The result from 2026 is documented. The match between them is not coincidence, it is architecture. If you've reached this checkpoint, I want to acknowledge your focus. The fact that you're still here proves you have the institutional-grade attention span required to navigate this market. To help me understand the global reach of this signal during such a pivotal week, I need you to do one thing. Comment your city, the exact local time, and the weather where you are right now. Whether you're watching this from a high-rise in São Paulo or a desk in New York, I want to see where the engineered markets community is standing as the MSBT ticker goes live. This is our baseline. Comment below. Operation Epic Fury began on February 28, 2026. U.S. and Israeli forces struck Iran in a joint military operation that the International Energy Agency later described as producing the largest supply disruption in the history of the global oil market, confirmed across Wikipedia's Iran War Fuel Crisis article, Al Jazeera's oil analysis, and the War on the Rocks report published April 2nd. Iran responded within days by closing the Strait of Hormuz to most commercial shipping, the waterway through which 20% of the world's oil and liquefied natural gas transits in peacetime, confirmed by PBS, CBS, and CNBC. Brent crude, which had been trading at approximately $72 per barrel on February 27th, jumped 10 to 13% to approximately $80 to $82 per barrel by March 2nd, according to Wikipedia's Economic Impact article, and continued rising over the following weeks to above $110 by early April, confirmed by CoinDesk's April 7th daybook. On February 28th, a Saturday morning at approximately 1:15 a.m. New York time, Bitcoin was the only major liquid financial market trading on the planet. Every stock exchange was closed, every bond market was closed, gold was trading in thin Asian hours. Bitcoin was fully open, globally liquid, and absorbed the entire initial institutional panic of the war's first hours alone. It fell 8.5% from approximately $66,000 to $63,176, documented by CoinDesk's March 15th analysis. Bitcoin sold off. First when the US-Iran war began. 2 weeks later, it has outperformed nearly everything. CoinDesk described this as Bitcoin functioning as a 24/7 liquidity pool that absorbs geopolitical shocks faster than other markets, a structural property identified by Gabe Selby, head of research at CF Benchmarks. Then something happened that Saylor had predicted, and the mainstream market had not priced. Bitcoin recovered. Not after the war ended, not after diplomatic progress was confirmed, not after oil fell. Bitcoin recovered while the war was escalating, while Carg Island was being struck, while the IRGC was threatening to deprive U.S. allies of oil and gas for years, while Trump was calling for the destruction of Iran's bridges and power plants. The recovery was not random. It followed a documented pattern that CoinDesk confirmed across multiple reporting dates. A floor of $64,000 on February 28th, a floor of $66,000 on March 2nd after Iran's retaliatory strikes on Gulf states, a floor of $68,000 on March 7th, and a floor of $69,400 on March 12th after tanker attacks. Each escalation, each moment when the war became objectively worse, produced a smaller drawdown than the previous one. The asset was learning. The market was learning. And what both were learning in real time is that Bitcoin is primal timber. This block will be brief, precise, and devastating in its simplicity. While the world was watching Carg Island burn, while Trump was threatening to destroy civilizations, while gasoline passed $4 for the first time since 2022, Michael Saylor was buying Bitcoin, not pausing, not waiting for resolution, not hedging, buying. The purchase record for strategy during the 40 days of the Iran war, sourced directly from SEC Form 8K filings, confirmed by CoinDesk, Fortune, Bloomberg, Cointelegraph, and Yahoo Finance, is as follows. Between February 23rd and March 1st, 2026, the first week of the war, Strategy purchased 3,015 Bitcoin for $204.1 million at an average price of $67,700 per coin, confirmed by CoinDesk and Yahoo Finance on March 2nd. Between March 2nd and March 8th, while Iran was closing the Hormuz Strait and oil was above $100, Strategy purchased 17,994 Bitcoin for approximately $1.28 billion, confirmed by Fortune on March 9th. Between March 9th and March 15th, while Trump was threatening water desalination plants, Strategy purchased 22,337 Bitcoin for approximately $1.57 billion. Right. On March 23rd, Strategy purchased 1,031 Bitcoin for $76.6 million, confirmed by CoinDesk's March 23rd report. Between April 1st and April 5th, with Trump's 8 p.m. deadline less than 72 hours away, Strategy purchased 4,871 Bitcoin for $329.9 million at approximately $67,718 per coin, confirmed by BitBo, Cointelegraph, and CryptoTimes on April 6th. The total, Strategy's Q1 2026 Bitcoin purchases reached 89,316 Bitcoin for approximately $6.3 billion, confirmed by Cointelegraph and BitBo as the company's second biggest quarter of accumulation ever. As of April 5th, Strategy holds 766,970 Bitcoin acquired for approximately $58 billion at an average cost of $75,644 per coin, according to its SEC filing. Every single one of those purchases was made with Bitcoin trading below the average cost basis. Every single one was made during an active war. Bernstein analysts, cited by CoinPaper on April 6th, confirmed that Strategy holds approximately 3.6% of total Bitcoin supply and maintained a $150,000 year-end price target throughout the conflict. The man who said war will accelerate the adoption of Bitcoin was not commenting from the sidelines. He was executing the thesis with billions of dollars while the world was on fire. Here is the architecture of the paradox that this channel has documented across multiple videos and that the ceasefire announcement last night made visible in a single price movement. Bitcoin's bull run, driven by the April 2024 halving, the institutional ETF architecture, the DOL safe harbor rule creating the 401k pathway, the deepening Morgan Stanley distribution network, was built on a specific macro precondition, that the Federal Reserve would begin cutting rates as inflation normalized, that global M2 money supply would expand, and that Bitcoin's 0.94 correlation with global M2 at a 60 to 70-day lag would translate that liquidity expansion into price appreciation. The Iran war broke that precondition. The suppression chain is documented and mechanical, not theoretical. The Strait of Hormuz carries 20% of the world's oil. Iran closed it in early March. Oil went from approximately $72 to above $110 per barrel in 38 days. Every dollar increase in oil adds to the consumer price index, the specific metric the Federal Reserve uses to determine whether it can cut rates. With Brent crude above $110 and U.S. gasoline at $4.14 per gallon, up 39% in 38 days confirmed by CNN live updates, the Federal Reserve's March 18th meeting, confirmed by CNN and PBS, held rates at 3.5 to 3.75% and projected only one conditional cut for the entire year. CME FedWatch was showing a 98% probability of a hold at the April 28th to 29th meeting as of April 7th, confirmed by parameters analysis. The suppression chain, oil to inflation to Fed, hold to liquidity, freeze to Bitcoin ceiling, was active and documented throughout the entire war period. This is what CoinDesk meant when it published its April 7th headline. Bitcoin pulls away from software stocks as Iran war. AI reshape market dynamics. Documenting that Bitcoin's correlation with the software stock ETF, that it had nearly perfectly tracked through all of 2025, broke sharply towards zero when the war began. Bitcoin stopped moving like a tech stock and started moving like something else, something that had its own logic, its own support structure, its own reason for existing that was not dependent on the same macro variables that govern equities. It started moving like primal timber. And last night, when the ceasefire removed the suppression chain's primary input, oil stayed above $94 per barrel even after the 16% plunge confirmed by Weeks and CoinDesk, but the trajectory and the expectation changed. The price moved 5% upward in 2 hours, squeezing $595 million in short positions. The short sellers had been betting that Bitcoin's suppression chain was permanent. The ceasefire showed them it was temporary. Okay, quick disclaimer. The macroeconomic and geopolitical analysis in this video is strictly for educational purposes and does not constitute financial advice. Trading and investing in Bitcoin and commodities during times of war involves extreme volatility and the risk of total capital loss. Therefore, you must prioritize strict risk management, disciplined position sizing, and your own due diligence, DYOR, before making any investment. These models are probabilistic, not guaranteed, and you are solely responsible for your financial decisions and the consequences of your trades. Stay sharp, use stop losses, and never invest capital you cannot afford to lose. Now let's continue. You're watching this video at some point on April 8th, 2026, one day after the ceasefire, while Brent crude is still above $94, while the peace talks in Islamabad are scheduled for Friday, April 10th per Axios and CNN, while the Strait of Hormuz has allowed only 2 vessels to transit as of Wednesday morning per marine traffic data, confirmed by CNN's live blog. In your city, whatever the weather, whatever the hour, the question this channel wants you to sit with for the next 20 minutes is not, should I buy Bitcoin? That is not this channel's question to answer. The question is, do you understand what you just watched happen over the last 40 days? If the answer is no, keep watching. If the answer is yes, press like and share this video, because the next 10 minutes are where the analysis gets structural. On April 7th, 2026, hours before Trump's 8 p.m. deadline, while Brent crude was at $111, while the Tersa crypto fear and greed index was at 13 out of 100, while Iran was asking young people to form human chains around its power plants, Anthony Pompliano, CEO of ProCap Financial, appeared on CNBC's Squawk Box, confirmed by the official CNBC video page published the same morning, and described Bitcoin as the shining light during the Iran war. That phrase deserves more analysis than most coverage has given it, and this channel is going to provide it. Pompliano was not saying Bitcoin was going up dramatically. He was saying something more specific, that in an environment where every other asset was producing ambiguous or negative signals, oil too high, stocks flat, gold failing to perform as a war hedge in the traditional sense, Bitcoin was the one asset whose behavior was legible, consistent, and structurally coherent. The Fortune analysis from March 11th, 2026, with the direct headline, Bitcoin outperforms gold and stocks since beginning of Iran war, documented the specific performance divergence that Pompliano was referencing. Bitcoin was up approximately 7 to 8% since February 28th. The S&P 500 was down over 3%. Gold, which was supposed to be the canonical war hedge, was down 18% from its pre-war high according to Protos, with the SPDR Gold Shares ETF losing $4.2 billion in its first week of the conflict, the fund's largest weekly outflow in its history. The divergence between Bitcoin and gold during the Iran war represents one of the most analytically significant data points in the asset's 15-year history, because gold's failure as a war hedge in 2026 is not a marginal event. It was the foundational assumption of traditional portfolio theory that gold holds value during geopolitical crises. The reason gold failed and Bitcoin did not failure is structural, and Saylor has been explaining the structure for 5 years. Gold is a physical asset. It can be sanctioned, as the G7 demonstrated with Russian gold in 2022. It can be seized, as the United States seized Venezuelan gold via the Bank of England, as it seized Afghan sovereign reserves, as it has seized the reserves of sanctioned states throughout the 21st century. It can be impounded in transit. It cannot cross borders without physical movement, which creates risk in conflict zones. Bitcoin, by contrast, is what David Sachs, the White House crypto and AI czar, described in a quote documented by the masculine synergy analysis of Saylor's Abu Dhabi keynote. Bitcoin is special. Bitcoin is an asset without an issuer. It is the dominant digital commodity in the world. This administration designated Bitcoin as digital gold. An asset without an issuer cannot be sanctioned. An asset without physical form cannot be seized in transit. An asset running on a decentralized network of tens of thousands of nodes cannot be bombed. The Iran war stress-tested every alternative store of value simultaneously. Only one passed. This channel documented in its April 7th video that U.S. spot Bitcoin ETFs recorded $471 million in net inflows on April 6th, the largest single-day total since February 25th, the sixth largest of 2026, confirmed by SoSo Value data via CoinDesk, Decrypt, Cointelegraph, CoinCentral, and Farsight investors. BlackRock's IBIT led with $181.9 million. Fidelity's FBTC followed at $147.3 million. ARKB contributed $118.8 million. Every single Bitcoin ETF recorded net inflows or held flat. Not one fund saw outflows. This was April 6th, the day before Trump threatened to destroy an entire civilization, with Brent crude above $111, with the crypto fear and greed index at 13, with the ceasefire outcome genuinely uncertain. The institutional behavior documented in those flows is not consistent with fear-driven selling or panic-driven buying. It is consistent with something more sophisticated and more historically significant: systematic accumulation by large allocators who understand the architecture well enough to buy at maximum uncertainty rather than maximum certainty. The Binance research finding documented in CoinDesk's April 7th daybook provides the analytical framework. Bitcoin's correlation with Binance's Global Easing Breadth Index, which tracks 41 central banks, turned strongly negative after the launch of spot Bitcoin ETFs, meaning institutional Bitcoin buyers are now front-running expected central bank pivots rather than reacting to them after the fact. The $471 million on April 6th was not fear buying. It was positioning for a specific macro sequence. Ceasefire reduces oil pressure. Oil reduction allows Fed to contemplate cuts. Cut expectation activates Bitcoin's 60 to 70-day M2 lag. Price moves before the consensus recognizes the sequence. The institutions were not reacting to the war. They were reading the war. The broader quarterly context confirms the accumulation narrative. January and February saw approximately $1.8 billion in net ETF outflows due to Federal Reserve policy concerns and sticky inflation prints, confirmed by Cointelegraph and Crypto Briefing. March reversed that, recording $1.3 billion in inflows as the first monthly net positive after 5 consecutive months of outflows, confirmed by multiple sources. The total Bitcoin ETF market recovered to approximately $90 billion in AUM by early April, per CoinDesk's tracking. On a day when the President of the United States was threatening to destroy civilizations, and the crypto fear and greed index was near the lowest reading ever recorded, $471 million flowed in. The CoinDesk Daybook confirmed that Bitcoin ETF investors' demand suggests they see the current price action as an accumulation opportunity. That is not fear. That is knowledge. This channel is going to present the ceasefire facts precisely because the details matter for the Bitcoin analysis that follows, and this channel will not oversimplify a geopolitical event that killed thousands of people and disrupted the global energy market for the benefit of a cleaner narrative. More than 1,900 people have been killed in Iran since February 28th, confirmed by OPB via AP. More than 1,400 people have been killed in Lebanon. 13 American service members have died. The Manab school attack killed over 170 children, confirmed by multiple outlets. A synagogue in Tehran was destroyed. The human cost of the 40 days between February 28th and April 7th is documented and real, and this channel will not minimize it by treating the ceasefire as simply a bullish catalyst for Bitcoin. The ceasefire terms, as documented across Axios, CNBC, NPR, PBS, Al Jazeera, CNN, and NBC on April 7th and April 8th, are as follows. At 6:32 p.m. Eastern Time on April 7th, 90 minutes before Trump's 8 p.m. deadline, Trump posted on Truth Social that he agreed to suspend the bombing and attack of Iran for a period of 2 weeks, citing conversations with Pakistani Prime Minister Shehbaz Sharif and Field Marshal Asim Munir. The condition was Iran's complete, immediate, and safe opening of the Strait of Hormuz. Iran's Foreign Minister Abbas Araghchi confirmed, posting that Iranian armed forces would cease their defensive operations if U.S. attacks halted, and that, for a period of 2 weeks, safe passage through the Strait of Hormuz will be possible via coordination with Iran's armed forces and with due consideration of technical limitations. Iran's Supreme National Security Council confirmed acceptance and claimed, in a statement documented by PBS, that nearly all war objectives have been achieved. Pakistan's Prime Minister Sharif invited both delegations to Islamabad for Friday, April 10th talks. with the U.S. delegation expected to include Vice President J.D. Vance per Axios. The ceasefire is fragile. The language is contested. Iran explicitly stated the pause does not mean an end to the conflict. Netanyahu's office said the ceasefire does not include Lebanon, despite Pakistan's prime minister saying otherwise, confirmed by NPR's April 8th report. As of Wednesday morning, only 2 vessels had safely transited the strait, confirmed by marine traffic data in CNN's live blog, against a backdrop of 426 tankers, 34 LPG carriers, and 19 LNG vessels still trapped in the region. The technical limitations caveat in Iran's statement has left shipping companies uncertain about how to coordinate passage, with Lloyd's List editor-in-chief Richard Meade telling CNN that shippers don't have the details from Iran, and they believe the system that was in place at midnight has not changed despite the announcement. The strait is not open. The ceasefire is not a peace deal. The Islamabad talks may fail. And Bitcoin, trading at approximately $71,225 as of April 8th, according to CoinDesk, is pricing all of that uncertainty correctly. A 3% gain on the day, rather than a euphoric breakout, reflecting exactly the kind of calibrated response to a conditional improvement rather than a confirmed resolution. CoinDesk's April 8th report, with the precise headline, "Bearish bets on Bitcoin, Ether, oil shorts lead $427 million wipeout on U.S.-Iran ceasefire," documented the liquidation cascade with granularity that tells the story of the war's Bitcoin market structure more clearly than any price chart. The total crypto liquidations in the 24 hours following the ceasefire announcement reached $595 million across 118,489 traders, according to CoinGlass data cited by CoinDesk. Of that total, $508 million was liquidated in just 12 hours, with short positions taking $398 million of that. The most aggressive short squeeze since March 4th, when Bitcoin rallied on the first round of ceasefire speculation, CoinDesk stated. The context that makes this number meaningful is the sentiment backdrop that preceded it. The crypto fear and greed index had been below 10 for essentially the entire duration of the Iran war, with a reading of 8 on the Sunday before the ceasefire, confirmed by CoinDesk's April 8th liquidation analysis. Sentiment data showed 5 bearish social media posts for every 4 bullish ones at the peak of war tension. TradingView's April 7th analysis documented Bitcoin's descending open interest, even as large buyers were accumulating via ETF channels, meaning the marginal retail and short-term institutional positioning was overwhelmingly bearish, while the structural long-term positioning, ETF inflows, strategy accumulation, on-chain whale behavior, was overwhelmingly bullish. The ceasefire announcement did not create bullish momentum from zero. It unlocked bullish momentum that had been building beneath the surface for 40 days, constrained by the suppression chain, and released it in a single 90-minute window when Trump posted those 6 words on Truth Social. The Bitcoin peak of $72,700 represented the top of the $65,000 to $73,000 range that CoinDesk's April 8th analysis confirmed had contained every Bitcoin rally and sell-off since the war began. The intraday consolidation to approximately $71,225 by Wednesday morning represents not a failed breakout, but a calibrated reassessment. The ceasefire is real, the suppression chain is weakened, but the strait is not fully open. The Islamabad talks have not happened, and the 2-week window is genuinely uncertain. Bitcoin cleared its 50-day moving average, confirmed by CoinDesk's April 8th daybook, and analysts at CoinSwitch Markets Desk projected a move towards $75,000 if momentum holds, with $68,000 as near-term support per Yahoo Finance's April 8th analysis. The technical target is the breakout level. The fundamental target is the resolution of the suppression chain. This channel now wants to bring Michael Saylor's architecture into direct contact with the specific events of the last 40 days, because the Iran war stress-tested his thesis in ways that no theoretical argument could have. Saylor's framework, as articulated at the Digital Asset Summit 2026 on March 26th, confirmed by the Crypto Times and the DAS 2026 official X account, is that Bitcoin is digital capital. Specifically, it is a way to store economic value digitally to move it through time and through space without any physical instantiation. That last phrase, without any physical instantiation, turned out to be the most important phrase in the entire Iran war Bitcoin story. Every physical store of value was compromised during the conflict. Oil, the most liquid physical commodity market in the world, became the primary vector of economic warfare, with the strait closure effectively weaponizing energy supply against the global economy. Gold, the traditional war hedge, fell 18% from its pre-war high, not because gold is bad, but because the war created conditions where sanctioned states blocked trade routes and disrupted custodial infrastructure, reduced gold's operational utility as a store of value in conflict zones. Real estate, the ultimate physical asset, was literally being bombed in Tehran, with airstrikes documented on bridges, airports, petrochemical facilities, and universities including Sharif University of Technology, per CBS News and OPB. Iranian authorities were asking citizens to form human chains around their power plants to prevent physical destruction of their country's infrastructure. In that environment, a world where physical things were being destroyed or threatened with destruction, the specific property that made Bitcoin valuable was not its price action or its halving cycle or its ETF flows. It was the without any physical instantiation part of Saylor's sentence. Saylor further reinforced the war-specific Bitcoin thesis at Bitcoin MENA 2025 in Abu Dhabi in December 2025, documented by the Masculine Synergy Analysis and Bitcoin magazine. At that event, Saylor described David Sachs's characterization of Bitcoin as an asset without an issuer, a formulation that becomes acute in geopolitical crises. An asset with an issuer, whether the issuer is the U.S. Treasury, the Iranian Central Bank, or any sovereign government, can be sanctioned, frozen, seized, or repudiated. An asset without an issuer cannot be sanctioned because there is no entity to sanction. It cannot be frozen because it exists on a decentralized network that no single government or military can shut down. It cannot be confiscated unless the specific private key holder is physically found and compelled. And in a world where 40 days of war produced destruction on a scale that killed thousands of people and threatened to destroy an entire nation's infrastructure, that property, the absence of a physical issuer that can be targeted, is not a technical detail. It is the entire investment thesis. That is why Bitcoin is primal timber, the foundational material that survives when everything constructed on top of physical and sovereign infrastructure does not. This channel does not give price targets. This channel gives architecture. The ceasefire architecture, as of April 8th, 2026, presents 3 specific scenarios for the next 14 days, each with documented and observable trigger conditions. Scenario 1. The Islamabad deal holds and the Strait fully reopens. The peace talks on April 10th produce a framework that Iran implements. Brent crude falls toward $85 to $95 per barrel. The Federal Reserve's June 16th to 17th meeting becomes a live cut event for the first time since the war began. And Bitcoin's 60 to 70-day M2 lag, confirmed by multiple sources including B Geometrics and Bitcoin Magazine, places the price response in August to September. Under this scenario, Bitcoin clears the $75,000 resistance that CoinSwitch analysts cited as the technical breakout level, and the range that contained the entire war period, 65,000 to 73,000, becomes the base rather than the ceiling. The 68% probability that myriad prediction market users assign to ships transiting the strait before May, confirmed by Decrypt's April 7th analysis, prices this as the base case. The accumulation that strategy, ETF buyers, and on-chain whales built throughout 40 days of extreme fear is the foundation under that base case. Scenario 2. Partial deal, extended uncertainty. The Islamabad talks produce a framework, but Iran's compliance remains contested. Shipping companies remain uncertain because the technical limitations and coordination with Iran's armed forces, language in the ceasefire, has not been operationally clarified. As Lloyd's List's editor-in-chief confirmed to CNN, Brent crude stabilizes in the $95 to $105 range. The Fed remains on hold through June. Bitcoin consolidates between $68,000 and $75,000 for the duration of the 2-week window. The range narrows, and the breakout or breakdown is determined by what happens at the expiration of the 14-day pause. This scenario preserves the structural Bitcoin accumulation thesis while delaying its expression, exactly the hijacking dynamic this channel described in its April 7th video. Scenario 3. Ceasefire collapse. The Islamabad talks fail. Iran resumes Hormuz restrictions. Trump resumes strikes. Oil returns toward $110 or higher. The Federal Reserve's June cut probability collapses. Bitcoin retests 68,000, potentially 65,000, with CoinSwitch's $68,000 near-term support level as the first test. The suppression chain reasserts. But even in this scenario, Saylor's thesis is not invalidated, it is merely delayed. Every day of the conflict confirmed in on-chain data and in market structure that the long-term accumulation of Bitcoin by institutional allocators was accelerating rather than decelerating under war conditions. A ceasefire collapse would produce short-term pain for traders who positioned on the relief rally. It would not change the structural direction of the institutional positioning that Strategy, BlackRock, Fidelity, and Morgan Stanley, whose MSBT ETF launched today, April 8th, confirmed by Crypto Briefing, Bitcoin Magazine, and Bloomberg's Eric Balchunas, represent. This channel is going to close by stating the conclusion of the 40-day test precisely, without hyperbole, without price predictions, and without the reflexive bullishness that characterizes most Bitcoin content. The Iran war was not a controlled experiment. It was a real conflict with a documented human cost that this channel acknowledged at the opening and will acknowledge again at the close. More than 1,900 Iranians killed, more than 1,400 people killed in Lebanon, 13 American service members dead, a school full of children bombed, a synagogue destroyed, a civilization threatened with annihilation by the president of the most powerful military in human history. This channel does not celebrate the conditions that produced the Bitcoin data it has spent 45 minutes analyzing. It analyzes the data because understanding it is the only way to give the audience watching this video an honest account of what is happening to the financial system they are navigating. What 40 days proved is this: Bitcoin is the only major asset class that established rising price floors through every successive escalation of a conflict that the IEA described as the largest energy supply disruption in the history of the global oil market. That fact is not a prediction. It is a documented historical record, confirmed by multiple independent sources with timestamps and price data in a period when every traditional safe haven either underperformed or explicitly failed. Gold fell 18% from its pre-war high. The S&P 500 fell over 3%. The SPDR Gold Fund lost $4.2 billion in a single week. Oil became a weapon rather than a hedge. Sovereign debt of every nation involved in the conflict became more precarious, not less. Bitcoin, the asset without an issuer, the digital capital that exists without physical instantiation, the foundational material that Michael Saylor described as perfected capital, programmable capital, incorruptible capital at Bitcoin 2025 in Las Vegas, went up 8%. Not because the war was good, because Bitcoin is, functionally and structurally, the closest thing the 21st century financial system has to a foundational material that does not burn. Michael Saylor bought 3,015 Bitcoin in the first week of the war. He bought 17,994 in the second week. He bought 22,337 in the third week. He bought 1,031 in the fourth week. He bought 4,871 in the week before the ceasefire. The man who said war will accelerate the adoption of Bitcoin on March 10th, 2022, and said, if you don't fear war, you don't need Bitcoin, 3 days before that. That man spent $6.3 billion between January and March 2026 buying the asset he described. His thesis going into the war was that Bitcoin is digital capital, the foundational asset without an issuer, the primal material of the new financial architecture. His behavior during the war was to buy more of it every single week below his cost basis in a conflict zone against a backdrop of the most extreme fear readings Bitcoin had ever recorded. The Iran war did not test Saylor's thesis and find it wanting. The Iran war tested Saylor's thesis, and Saylor answered it with $6.3 billion. On April 7th, 2026, 1 hour and 28 minutes before the deadline at which the President of the United States had promised to destroy an entire civilization, a post on Truth Social removed the war premium from oil, released the suppression chain's primary constraint, and produced $595 million in short liquidations across 118,000 traders who had positioned for the wrong outcome. Bitcoin went to $72,700. It is currently trading at approximately $71,225 as of this morning, April 8th. The peace talks are in Islamabad on Friday. The ceasefire has 2 weeks. The Morgan Stanley ETF launched today with 16,000 advisors and $9.3 trillion in client assets behind it. The exchange reserves are at 2.21 million Bitcoin, the lowest since December 2017. The illiquid supply is at 70% of all coins mined. The daily new issuance is 450 Bitcoin. The annual new supply is 164,000 Bitcoin, and 1% of Morgan Stanley's conservative base is $62 billion. The primal timber is old, it is dense, it is load-bearing, and it was here before the war. The war just showed you it was here. Respect to the few who made it to this final second. You've just witnessed the most comprehensive audit of the Iran war's impact on global liquidity. You didn't just watch a video, you processed 40 days of financial physics. In a world of 60-second distractions, your focus is your greatest unfair advantage. You see the architecture, you see the diamond. Here is your final directive, to signal that you've decoded the math of this primal timber and finished this entire investigation. Comment the code Timber71 below. This is our secret handshake for the elite 1%. It tells me that you understand why 71,000 is not just a price, but a structural floor. The Morgan Stanley pipeline is open. The supply is gone. The map is in your hands.